You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from theoptionsinsider.com. If I sound a little bit different, it's because we're not coming to you from our studio in Chicago. No, we're coming to you live from the Options Industry Conference here in scenic and sunny Florida. We have a lot of great guests lined up for you, so stay tuned to the network over the coming week or so because a lot of great content heading your way. And next up on the old network is a newcomer to the network and indeed to the program. He is Patrick McCreary, the executive director over there at Volant. Patrick, welcome to the program.
Thank you.
And as we are wont to do with all of our first timers, Patrick, why don't you go ahead and give our audience a little bit of an overview of your background in the space and then what the heck it is you guys do over there at Volant.
So I'm a software engineer. I started off at Goldman Sachs working on their execution services business.
I'm not familiar with them. Who?
And after a few years there and a few other changes in my career path, I eventually landed at Volant Trading. And from there, I built the execution services business from the ground up. That was about 7 years ago. And now we've been live for 6 years and have a list of clients and a lot of business going on. We're looking at expanding.
So let's talk about that business. I'm sure a lot of our audience is not familiar with Volant and what it is you guys do. So basic elevator pitch, what is it you guys do?
So we specialize in making highly customized offerings for our clients where we can get them a combination of best execution, fee minimization, or liquidity acquisition based on their needs and their routing desires. So we customize that and fine-tune it for each client's individual needs.
So do you specialize in certain market segments? I mean, the name implies a certain bit of volatility there. Do you guys play in that space, or is it just a cool-sounding name?
That's our market maker. So the main business for the firm is market making, and they make markets on all the OCC listed options exchanges and also some futures exchanges. So the execution services business kind of dovetails into that a bit, where for certain clients that are interested in it, we have the ability to expose their order flow to our market maker for internalization purposes.
And right now, who are the early users of your execution services? Are they focusing, and like I said, are they pretty much leaning into the market making arm, or are they charting? I mean, we have people come in here from different firms talking about execution and trading things in a wide array. I was talking to someone just recently talking about how their clients like to just chase vol, and they don't care where it is. It could be in equities, it could be in ags, it could be in dairy. It could be wherever the vol is, they want to go. So, is there a certain asset class or segment your clients are really focusing on right now, or are they kind of all of the above?
It's actually all over the place. We mainly have clients we have clients across all types of backgrounds, from like hedge funds to retail trading websites and other broker dealers that are aggregating a wide gamut of client types as well. So we honestly have a little bit of everything and have adapted our system to handle all of it.
So what is it that brings you down to OIC this year? Do you have is it time for some announcements, or are you kind of just here to catch up with your end users and maybe find some new clients? What is it that brings you to, outside of the weather? What brings you to sunny Miami here?
Yeah, we come down here for the last 3 years, and it's usually a combination of getting kind of a pulse on what's going on in the industry, meeting up with some of our strategic partners, looking for new ones, and talking to potential clients and existing clients, and just kind of syncing up with everyone that's in the industry.
There is a lot of syncing going on
here,
which is interesting. You obviously you come from a software engineering background, so obviously the technology side is an interesting focus, and there's that kind of intersection is in focus a lot at a conference like this, where we see the technology and the needs to connect to, let's say, myriad and disparate venues is coming into contact with the issues for, let's say, the other half of your firm, the other side of your firm there, which is the market-making, liquidity-providing side, where they're having to deal with all this technology to connect to all these different venues. We're up to, 16 now, different exchanges now, which is just a large amount. Let's just put it that way. I'm curious for you, from a technology perspective, also obviously from a vendor perspective, that sort of fragmentation provides a lot of opportunities. But on the flip side, you guys come from a core of liquidity providing side of the space, and that's obviously poses a lot of challenges there. So I'm curious for you. You kind of maybe you walk the line between the two. Where do you fall on this proliferation of venues, and maybe the onus it puts on liquidity providers and indeed on technology providers to be able to deal with all these disparate array of trading venues?
Yeah, I think you put it pretty well in the sense that there's both a problem here as well as an opportunity, depending on which side you fall on. So on the market making side, they definitely struggle with being able to make all the names, all the strikes across all the exchanges, and managing the technology infrastructure to support that. On the execution side, we have similar challenges, but I would definitely say we have a lot more opportunities because as this happens, as things proliferate like this, we are given the opportunity to kind of manage a lot of this headache that people would have to deal with otherwise. So we normalize a lot of the infrastructure that's going into connecting to the exchanges and getting all their fee files and tracking all this information that clients need to track and report to their clients or to manage their own billing infrastructure. And that becomes kind of an opportunistic thing where we can go in there and say, hey, we're going to take care of all this for you, and you don't have to worry about it as much. So
you do wear a couple of interesting hats there, because you're right. On the one hand, on the core business, it's a huge problem, and yet for your sliver of the business, it is an enormous. It's pretty much, I would have to say, that one of the reasons you guys probably exist is to navigate this very nuanced ecosystem. So I wonder, and it's a little bit of dual purposes going on there, which I think is kind of interesting.
Yeah, it is, and it's almost necessary to do it now to kind of differentiate as an execution services business, because it's been fairly commoditized to the point where you're not really innovating too much on smart routing algos and stuff. It's more going to be creating a very good user experience and service offering for the clients.
Actually, put on the hat from the core market making crew just for a second, because one of the other topics we've been talking about a lot here at the conference, and it comes up every year, is the issue of what's going on in your space, which is effectively we've seen fewer and fewer liquidity providers over the years. There's not many firms really getting into that space anymore, so it's become a very targeted, siloed, small group of firms that are really providing a lot of liquidity out there. So there's a lot of talk every year about what we can do as an industry to maybe reverse that trend, maybe try to incentivize you guys, and maybe I don't want to bring you new competitors, but maybe incentivize new firms to come into the space and maybe lift some of that liquidity burden. So I'm curious, what do you think as an industry, what do you think we should be focusing on? What can we do to really make it a little easier to be a market maker and a liquidity provider in 2019?
Yeah, I mean, that's a very complicated question. I think that there's some nature of the way the market making is structured right now, with the auction mechanisms being able to effectively disincentivize people to quote that have access to a lot of captive retail flow in their execution services arm that they're going to internalize with their market maker. So that kind of reduces the ability for a lot of people to get access to good liquidity in the market. So when market makers that don't have these execution services arms try to quote on the screens, they're just going to get picked off in a lot of scenarios and not really get a chance to interact with the good opportunity, good trades that are available out there. And then when they do try to step into the auction mechanisms, there's they're disincentivized through the pricing mechanisms that are involved in the breakups from trying to trade against that retail flow. So that's one of the things that I've seen that I think kind of impacts market makers. And then the other is just like the prohibitive cost for them to get into this business and quoting on all the exchanges, meeting all the requirements, keeping their quoting in compliance, all the technology that goes around between making sure that they're meeting all the quoting obligations to making sure that they're not sending too many messages. There's a lot of stuff on the compliance side as well that adds into this, let alone the technology of just maintaining the infrastructure for market making.
So maybe even though you're in the industry, you're maybe advocating for lowering the barriers to entry a little bit?
Yeah, I think that could help. Maybe there's an opportunity there as well for someone to come up with some sort of vendor platform that would allow like a market making in a box where they could get access through the exchanges. But I think the reality is that there's a lot of different factors that have just made it very difficult for people to get in, and until some of these things changes, whether it's the cost or some of the mechanisms that are on the exchanges that are kind of reducing the ability for people to interact with good flow, we're probably going to be in this state going forward.
Let's talk about interacting with good flow, because that's the challenge for a guy like you. Obviously, you're out there trying to find all that good flow and put it up in the right spots. And one of the interesting things that comes up at a conference like this a lot is the issue of auctions. It's kind of a divisive issue. On the one hand, people say, hey, look, it's a nice, great, tight advertisement for our business. It's 3 cents wide, But then you say, oh, it's only 2 by 1, And so is that really a good advertisement or not? I don't know. So it seems like there are definitely two sides to that. I'm curious. You guys obviously spend a lot of your time finding ways to execute for your clients. What are your thoughts on the proliferation of auctions? It seems like every venue has an offering like that now, and whether they're at the end, are they a good thing because they're showing nice tight markets, or is it more the fact that they're disguising the true liquidity in the marketplace?
Yeah, it's interesting because they do disguise, I think, at least the quote that you could have, where are the options actually being priced at to a certain degree. They do kind of give the illusion of price improvement. So when you go out there and the market's $1 by $2, you're now getting 20% of price improvement or 40% of price improvement. So it looks like a good statistic on one end, but on the other end, that market probably should have been quoting at like $1.30 by $1.70 instead. So while you get this kind of false sense of price improvement, you're actually trading in what the market should have been if it was actually lit. So the auction mechanisms kind of disincentivize a lot of market makers from putting out good quotes, and if some of the biggest players aren't putting out those quotes, and no one else is going to kind of join in and take the chance of being picked off. So now we have ultra wide quotes and a lot of names as a result. This obviously doesn't affect the really liquid stuff like SPY though.
I like that term, false price improvement. I'm going to have to borrow that from time to time, Patrick. So hopefully your licensing fees are fairly modest. But obviously you spend your time navigating these very turbulent, very fragmented waters. Leaning off the core, market making firm to kind of provide a lot of execution services. But is there? We kind of touched on it earlier, but I'm still kind of curious. Is there one area you see right now that you're really focusing on? That's a great growth area for you guys in terms of there's still a huge demand, a huge need for your execution services, or maybe there's a new product a lot of firms aren't really playing in yet that you're seeing some clients have some need to take your expertise in your traditional areas and maybe apply them to something, let's say, a little bit more esoteric, maybe fluid milk, something fun like that. I'm just kind of curious, where do you see kind of your growth opportunities coming in the coming months and years?
I think it's really going to be around navigating just the complexities of the options market. Like, what can we do to achieve their goals? If it's a matter of sourcing liquidity for them through alternative means, or is it going to be just navigating the microstructure of the landscape for certain trades that certain clients are trying to put up, or is it just providing a maximization of price improvement? That's really what it kind of boils down to, at least staying inside this industry. Outside of that, I think creating just a more holistic offering, adding and expanding into other areas that make sense with an execution services business would be kind of the next phase or next steps that we would want to look at. So.
Well, Patrick, I'm glad we had a chance to kind of catch up and actually have Volant on the network for the first time. Seems like It seemed like we would have done this earlier, but there's a lot of people out there to talk to, Patrick.
Yep.
But before we go, we like to give our attendees here, our guests, a chance to perhaps share with our audience a little bit of a hint, a little bit of a tease of maybe what they can expect from them in the coming months. Maybe you have a new announcement you're making here at the conference. So what can our listeners look forward to coming from you guys in the coming months?
I can't really disclose the details yet.
It's just
but
you and I talking. These microphones are all off. There's no one listening.
But we will be getting into some new business areas in the upcoming months, once we get some approvals in place. And
Start with a C? CRYPTO by any chance?
No, a little bit more traditional than that. So, yeah, but we'll have something interesting coming out soon, and we have some clients that are friendly that will be starting off with us.
Well, we'll look forward to that. Patrick, thank you for joining us, giving our audience a little bit of a glimpse into what you guys do over there at, I've always said Volant, so Volant. That at least you educated me. And we'll look forward to seeing maybe how this new business, how it plays out in the marketplace in the coming months.
Great. Thanks for talking to me.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions@theoptionsinsider.com.